Hey, welcome everyone. Tom here from Park Avenue Trading, your chief trader, keeping you sane in these insane markets. I'm going to tell you what to look for while all gurus basically have been telling you what happened. But anyway, in this video, we're basically going to do a classic technique known as the key reversal. I'm going to go over what the key reversal is, because a lot of people see key reversals all the time, and they very rarely happen. So key reversal is a common pattern that has been known and used for many years. It refers generally to a situation where, for a buy signal, the market makes a lower low than the day before, but then it closes higher. That's what the people believe the common definition of a key reversal is. Or a top reversal would be the opposite. It has become, fashionable lately to debunk the significance of the key reversal, because they're not really applying the key reversal to the true definition of it. What I just described to you before, where a market makes a lower low and then comes back up and closes higher, that's really a Larry Williams oops trade. And that's basically something that happens here, okay? The the market right here trades really slightly lower, comes back up through this low, and then it starts trading up. Now, Larry Williams called that the oops trade. It's not a key reversal, all right? And a lot of people that, they debunk the significance of the key reversal. They're done on days. They're not done on hourly charts. So that's important, okay? Really, what it is for a buy signal, okay, the signals come from a significantly lower low, not a fractionally lower low, or a significantly higher high, not a fractionally higher high. And what I did was I basically put a 40% filter on it to actually say, okay, that is, a true key reversal, okay? So I required that the extreme price on any previous day range must be 40% greater than the previous day's range. I'm sorry, that day's range must be 40% greater than the previous day's range. And then I've always added to what I call an IFW stop, okay? And that stands for in case I'm effing wrong. I definitely have to have one of those stops in. So let me go over quickly with you exactly what it looks like. It's much easier for me to show you a drawing of this than actually try to go and search one out, because I'm that lazy. I don't want to go back to daily bars and actually, because like I said, they don't occur frequently. They occur infrequently. But the thing is, a lot of people want to use these on like hourly bars, 15-minute bars. You can. The rules still apply. Obviously, you have to change the well, actually, you don't. You could keep it at 40%. But just realize you're going to get a lot more whipsaws, okay? Because this thing was designed actually back, if you look in the old school technical Bible, technical analysis by Williams and McGee, okay? It's described in there. It was done for stocks, daily bars, not hourly, because those guys were really talking about longer term trends. So what I did for you is I made a little chart, okay? And here is the key reversal chart. So key reversal, 40% of the previous range, all right? So we have 3 days, okay? On the third day, this marketplace basically takes off and makes a new high. This high is greater than or 40% of the previous day. But then it reverses and it closes lower than this day. This is a sell on the close. So now you can go and search for these things on a daily bar. Look for those big spikes, okay? And then where the market on that same day closes lower, say, oh, that's a key reversal. Let's see how it worked out. Okay, they're pretty good. They're probably about, I'd have to go maybe 75 to 80%. They do call good movements. Now, the thing with them is that markets always trade back up into ranges before they actually make their final plunge. You know, they're not dead yet. They come back and they fight a little bit, and then that scares people out, and then the market turns. It's like one of those things, you know, you went short, it went down, you know, 50 points, you're jumping up and down screaming, yes, I got it. It's going to go 10 big figures down, and I'm going to make a tremendous amount of money. And then the next day, the thing's right back up to where it came from and slightly higher, and you're going, oh, shit. You know, and you scare yourself out. But go back to that stop video that I talked to you about where you could play strategic stops. These are two good techniques to incorporate. Next one. Okay. So market, day one, day two, the market makes a higher high, basically closes here. This marketplace zooms down, makes a new low. This distance is greater than the previous day's range, and this marketplace closes higher. You buy on the close. That is a true key reversal. That's it. Now, I'm going to do another video on inside days. Inside days are really simple, but I'll do a video on that. But this is classic technical analysis so that you don't get confused. I mean, this is the rules. Now, I put a 40% filter on it. You could change it. You can go, I want to make them occur more often. You can make it a 20%. You can make it 15%. You can make it 10%. You know, it's up to you. Then you have to test it, and you have to see what the validity is, what, you know, the win-loss ratio is. That's the most important thing. You know, I took 40%. How did I take 40%? I just pulled it out of my ass. I said 40%, you know, 50%, you know, a retracement, 50% retracement. That's an important retracement. Let me go 40% because I don't optimize anything. It's important not to optimize anything. I could have went back in time and said over the last 3 years, it was 27.5%. And I would have nailed every one of these things, you know, and I would have taken $1,000 and made, you know, $500,000 with it. Once you start optimizing, you know, then the system's going to fall apart in the future. That's how these guys with these robots, you know, they say, oh, historically, 27 years of testing, you know, this robot has done this. And you go and buy this $150 robot, and the thing's falling apart. Like you're losing money left and right. You're bleeding money left and right because they optimized. Now, if you went back and did the same test that they did, with their parameters, it's going to come up with the same results for starting forward on day one that you have it. Now, here's the thing. If you start seeing all these crazy rules inside that robot, that means they optimized. Because the more rules you have, you're trying to basically make up for shit that happens so that you're trying to catch every move. Don't do it. Pick something, stick with it, go for it. All right, enough on that. So I look forward to seeing you soon. Remember, if you like what you see, like and subscribe. Don't forget to ring the bell so you can get some more really cool knowledge. At least I think it's cool knowledge. Head on over to parkavenuetrading.com. Get yourself a free ebook. It is unlike anything that is out there. It's real stuff. Basically battle tested in the most rigorous arena in the world, the spot Forex market. Look forward to seeing you soon. Cheerio.